Back now at 8:35 with the new industry that's popped up to help couples who are struggling to start a family and afford costly fertility treatments. NBC's chief medical editor, Dr. Nancy Snyderman, is here with the details. Nancy, good morning.
Good morning, Savannah. This is a surge in companies that give loans for in vitro fertilization, egg harvesting, and all those other fertility treatments that you know about. Some call it a recession-proof business. When Jill and Tom Clinton were married in 2006, they knew they wanted to start a new family right away, but it turned out to be more difficult than they thought.
We did get pregnant, but we miscarried. So we knew we were a little bit older. We knew that it might be something to look into at that point, fertility.
As small business owners, the Clintons do not have insurance to cover fertility procedures, which average over $12,000 per IVF cycle. But with the money they had saved, they were able to pay for enough treatments and conceive their first son, Harrison.
We were thrilled and knew we wanted to have more kids, although, we had limited funds, so we weren't sure how many tries we would get.
It was at that point that their doctors at Shady Grove Fertility Clinic in Maryland told them about a growing trend in lending, fertility financing. Former banker Jules Siegel noticed a void in lending for couples desperate for families who don't have time to wait. He says business is brisk.
At the present time, we're funding about $1 million of loans a month. We're on a very steep growth curve, and we're looking to fund about $15 million in loans in 2012.
But Siegel runs his new business a bit differently from the banks he's headed up before. Because his company caters to people who are often in an emotionally fragile state, he makes sure that the employees at CapXMD are experienced in the fertility industry. Some of his new hires have even gone through the process themselves.
They understood the language, the terms that I used that were associated with fertility. I took comfort in that. We didn't have to look any further, so we felt like that filled in the gap for us and allowed us to do the final cycle.
And it was that final cycle that gave the Clinton family results. Twins, Piper and Hudson.
Plenty of results.
Amazing results.
Yes, we're finished with results.
But despite the demand from couples looking to be parents, these loan companies have generated a bit of criticism. Some worry about conflicts of interest.
You really have to be a little bit careful because you've got vulnerable, desperate people who want to hear that there's some answer to their prayer. And so I worry that they're not going to listen to that interest rate. They're not going to really hear what the failure and success rate is.
There are dozens of fertility finance companies popping up across the country, and interest rates vary. At CapXMD, rates range from about 9 to 13%.
We're in business to make enough money to stay in business. Otherwise, we wouldn't be able to help the people we help. Our interest rates are highly competitive and below those of credit cards.
Another concern is that doctors may push the loans on patients in order to secure more business. Dr. Robert Stillman at Shady Grove Fertility has less than a 2% equity ownership in CapXMD, and he says it's a win-win situation.
The more patients we are able to see, if we can be successful, then we would make more income. So that's a win. But it also comes as a win for the couples in that they're here to have a family.
But experts warn that as with any business deal, families need to do their homework and think forward.
You've got expenses coming if you do have that baby. Even at a time when you're really trying as hard as you can to get that child that you want, you need to keep a certain amount of business sense about you in dealing in this area.
The Clintons plan to pay off their loan early within the next few years.
You laugh.
In the meantime, they say they got the better end of the deal.
They get the money, we get the kids. That's a great deal, I think. We get the best part of it.
Dr. Nancy Snyderman joins us. You know, this sounds like such a great idea, because why should it just be that only people with money can afford these expensive fertility treatments?
I think it is a good idea, but I think you have to channel your inner Susie Orman. You really have to read the details. If it's a 22% finance charge, you wouldn't do that in any other loan. Make sure you're dealing with a reputable fertility clinic, because you don't want to just get pregnant. You want to have a live baby. So you want to go to an accredited clinic. So do your homework on that. And then make sure you really can't afford it. You know, I just want to warn people, if you want to parent, It's not always about popping out a baby through the birth canal. It's about parenting. So look into adoption there. This does not cover adoption, by the way. This just is for fertility treatments.
Do you have concerns about the clinics that partner up with the lending services? Because on the one hand, it's quite convenient for the patients.
One-stop shopping.
Yeah.
I don't have problems if the doctor doesn't have a piece of the action. If I'm the doctor and you're running the finance company and the information is there, no problem. But if, in fact, I'm getting any kind of kickback or I have any kind of financial gain, that's not just a gray area. That crosses the line. And some people think this is a little predatory. You have people who are already emotional. They want something. They may not be thinking clearly enough. Just like any other doctor, take someone with you who will read this, counsel you, and be your pit bull as you go through this.
Yeah, you need that because people, they're wanting
a
baby
so
bad.
Right.
Yeah.
And you could lose a lot of money.
Dr. Nancy Snyderman, thank you.